Let's talk about ETFs and index funds. I promise by the end of this video, you'll no longer be losing sleep over the differences between the two. First, we'll start with a definition for both. Makes sense? Index is a fancy word for a list, and a fund is a pot of money that is used for a specific purpose. Therefore, an index fund is a pot of money that invests into a specific list of businesses, or commodities like gold and silver, government bonds, and more. But let's just stick to businesses to keep things simple. An ETF, or exchange traded fund, is essentially an index fund that can only be traded on exchange platforms. And they're so similar that Vanguard, the company that actually created index funds, states on their own website that most ETFs are just index funds. But there are some key differences between the two. Index funds update their price at the end of each working day, meaning that everyone who trades a fund on that day will get the same price, whereas an ETF constantly updates the buy and sell prices in real time. This means that an ETF can be cheaper to buy than an index fund and offers more insight into how the fund is performing, so it's the preferred option for a lot of casual investors these days. Investing in ETFs or index funds will usually have low fees attached, although some ETF platforms offer zero platform and trading fees. But if you were to invest in an actively managed index fund, you'd have to pay a little bit more. Also, if you're wondering what I mean by actively managed fund, or if the other index fund related jargon is confusing you, you can click the link in the description to gain access to our index fund cheat sheet. It's completely free and has a glossary of investing jargon for you to look through, along with an overview of the major brokers, their fees, and other information. ETFs generally offer more flexibility when trading, and not just in terms of their price. Some ETF platforms offer after-hours trading, meaning that you can invest while the market is closed, and this is another reason as to why they're so popular. There are less limitations. There's also a very small minimum investment required, just £1 on some platforms, compared to the minimum investment of £100 to £500 for most index funds. So for casual investors and traders, ETFs tend to make the most sense to invest in. On the other side though, index funds have been around for longer, so they could be considered more reliable, and you can fine-tune them to fit whatever needs you might have. In all honesty, if you're investing for the long term, it won't really make much of a difference whether you invest in ETFs or index funds, but there are enough differences that might make one of them a preference for you. In the UK, both ETFs and index funds can be invested into via stocks and shares ISAs. And as of the 6th of April 2024, you can invest in as many different stocks and shares ISAs as you like. The annoying one account per year limit has now been removed, meaning that you can try out both ETFs and index funds should you wish. And that's pretty much it. I've added a link to our article on the differences between ETFs and index funds in the description below, so feel free to have a look at that if there's any more information you need clearing up. And as always, if you have any further questions or suggestions, be sure to leave them in a comment below.